Morning, everyone. Good afternoon, good evening, wherever you are. So, this is the NFP price action review. Now, we'll be talking about NFP. This is a day you don't want to trade. You want to paper trade, which is exactly what I did. But I was really surprised with my results. I was emotionless, and trust me, let me just show you the results. So, when we go to paper trade, I'm going to sign in. You see, I made $500. But this is nothing on a 10K account. What will surprise you is my history here. My no counts. So I took 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 trades, and I lost only 3. You see that? This last one I wasn't supposed to lose it. Now let's go through what I did. These are the trades. I was taking these trades live as they were happening, putting back the annotations. This is what pretty much we are going to go through. I want you to see I have included all that is necessary for you to trade such a day. NFP is literally known to be range bound. What do I mean? It will take, let me first remove this. It will take out sellers, it will take out buyers. Just like you saw this NFP candle, it went. Now, it is seeking liquidity to the downside, takes out buyers, takes out sellers, takes out buyers on every angle. Now, going back to the 1 minute chart. Now, these are the things you want to learn. Okay? Let me first log out of paper trading so that we can have a clear view of this price action. Now, the one setup for life is one thing you have to learn that ICT teaches. One setup for life, and in the 2022 model, these models are underrated. You need to go to ICT this channel and watch these teachings. If you trade futures, you trade other pairs, well, it's okay, use your own model. But if you intend to trade futures, these are so important. Now, let us look at what happened here. Beginning with the 8:30. 8:30 is right here. This is on the 1 minute chart. Opening price is right here. So this is 8:30 opening price. So 8:30 we had NFP to put in this bullish price action. Now at 8:30 we work ICT in 2022 model. On a bullish day, we need to deal with the bullish day. We want to buy below 8:30, but at 8:30 price just skyrocketed upwards. Now we wait. We mark all this liquidity. This is the sell side. This is the sell side. Now 8:30 opened right here. When 8:30 opens, it put in. I'm going to go through how I arrived at all this. Let me first show you. So 8:30 opens, takes out buy side. It fails to displace below. You see this down close candle, and it is immediately balanced. This is a strong price signature that when we break above this level here, alone is enough for you to go long when you start the price action. And even a failure to displace below will just generate liquidity. And now, putting this candle here, this is a candle which is called what? Indecision. Now, after putting in an indecision candle, you want to study these candles, how they are printing. Immediately we displace. And this is a strong level. This is your strong level. You can put your stop loss here and buy at the close of this candle. Target the next key level. I told you that you have to have these levels marked on your chart. Previous monthly high, previous weekly, 3 days high, 3 days low, 1 hour fair value gap highs and lows. You're going to see what is going to happen in this market. When we take buy side, the key level was the previous monthly high. We are above 8:30 and we are above the opening range. So opening range is this one, the 9:30 opening price and the 4 p.m. closing price of the previous day. Now, when we are above the opening range gap, price action tends to retrace up 50% before it can continue its own. This market was too expensive for us to keep buying. though we had NFP. You just wait when you have that in mind that you know what we want to buy below 830 or close to the 830 opening price. Okay, below or close to. Uh, what you had to do is to read the story. You read the story candle by candle. This is what exactly I did. Now let me walk you through a 2022 model. So buy side is taken. This is the previous monthly high. It is it. Once we are above a key level, a high, we are in a premium. When we are below, we are in discount. In a discount, we buy. In a premium, we sell. So we went above. Now, when you go above, you wait for a market structure shift right here. Hmm? When you have your market structure shift, you want to see displacement below, like momentum below this market structure shift. Once you have displacement below, you can sell this market at market order here, or you wait for a retest of the order block. This is your series of down close candles become the order block right here. Sell because you know the narrative that it is too expensive to buy, so we have to sell. Market is in deep premium. So when you sell, your stop loss is above the candle that the most energetic candle from above is this one. But to minimize the risk, we put our stop loss here because we have a monthly high here. Price action will gyrate up along this level. And what is it doing? It is cooking for us the one setup for life. So one setup for life is this. So one setup for life, let me just do this. So one setup for life, we have price action coming. Price action consolidates. But where are these consolidations? They mostly occur around these key levels. And then you want to see aggressive candles so that people can guess this pattern that is a breakout. Once you see this aggressive candle, wait for stop hunt. Sometimes it will not happen, sometimes it will happen. But you wait for stop hunt and any inversion, just take the trade as your first take trade and target the opposing range. Now let's watch price action. When we have all this in mind, we know that price action has had a market structure shift. We have cooked. See all this, me I call it let him cook. So we have cooked the one setup for like for later. We know we are bullish. We cook along a key level and we are cooking while we are selling. We are targeting liquidity. And once we take any liquidity level, okay, once we take any liquidity level, I want you to notice. I told you any inversion after sell side has been taken, we have cooked, we have our one setup for life, target buy side. Exactly that is what I did. I entered on this candle. So let's put back paper trading so you can see. At the end, I'm going to do a thorough analysis of how, if you continue with the lecture, you're going to see. So I was watching price. I was distracted. I was watching price as I was watching other trades. So I think around which point? Yes. When we hit this key level, I think I was watching some live YouTube streamer. When we hit the first presented fair value gap, and then we had this inversion right here, right here. Yes, yes, this inversion right here. Some YouTubers sold, but then price took so much, and their stop loss was above here, so they exited the trade. Me, I held because I knew the narrative. The market is too expensive. We cannot buy. We have to sell this market for us to buy. So I sold here because I had missed my selling point here. See, this is where I want to sell from. This point is where I want to sell from, this one here. The key level retest of the key level, which is also in line with the series of down close candle, which is the order block. You want to sell when you see a bearish candle, sell short so that you're. But me, I missed. So when I saw this candle with immediate rebalance, I knew that we were not going to come up here. So I sold on this candle. Now on selling, it came back again, it retested. Because I was so scared still to sell, I waited for this candle to put in fair value gap. When I put in a fair value gap, I waited for a retest of this fair value gap. I sold more here. So I sold. Then this is the ICT would sell here on this C level here. So me, I was waiting for some little bit of confirmation. So you see, when I sold and I knew that I'm targeting this liquidity, when price action took this high, hmm, I told you we are hooking the one setup for life. Hmm? I told you price action comes, puts in a high, that's the stop hand, and flies. That is the one setup for life. You want to learn that one setup for life. When we take stop hand, this is the market structure shift right here. We've closed above the opening range gap. Now I knew exactly that we are coming to attack buy side. Why? Because of this huge momentum candle downtown and a huge momentum. This price action is rebalanced. This is the balanced price range. If at any one point price action takes out this level, then we should know that we are bearish until we take all this liquidity, mark my point. If at any one point in the future, which I'm going to highlight like this, then we shall see what happened. If at any one point we disrespect this level, then our next target is where? Down below. And we don't just sell because we have disrespected. I told you, whenever we are selling, we look for a stop hand before we get involved. Okay? So now what happened? I bought here. After taking profits here, ICT tells us that when never price action puts in a low and immediately rejects, this is should be your take profit. It will give you one more chance and fly. You could buy the stops here. You buy it, but I waited for confirmation. When you have a huge momentum candle at around 10:30, you don't think twice. Those who are scared can wait for creation of a fiber gap. Sometimes it won't be created. So I bought when I saw this candle. I was supposed to buy at the close of this candle, but then I waited for its return to the fair value gap, and I bought here. I bought, and my take profit was take out the. This is not London. This was AM. Because here we reached here at around 11 AM. The 10 AM, that is the kill zone, which is AM liquidity. Is AM buy side liquidity. So when I took profit here, because I knew it was expensive, we are bullish. We can't just go up. And everyone is looking for longs on this day. You see how you are putting narrative, you're thinking through the market. You want to know what other people are thinking so that you think contrary to what they are thinking. So many breakout traders will see this as a breakout. It's range. I'm taking my profits. I'm waiting to see more price action print. Hmm? What happened? And then I switched channels to another YouTube stream. The YouTube streamer wanted to go long here. Once we broke above this level, I think ES had broken above the previous day's high. Me, I was waiting and watching break above this level. On a day like NFP, you look at who has been making money. From all this time, buyers have been making money. Okay? More buyers came in and they made money. So you see, this leg down is inducing people to buy. Now we know that majority of the retail traders are long. Are going to go opposite to what majority are doing. We are going to sell. Okay? Remember, I told you when we break below this level, it means all the sell side is going to go. We'll say that later. Let me first remove this, put it here, or bring it back later. So what happens is that this point, which is the previous monthly high, we told you the AM buy side. I told you you should never buy when we have just taken out buy side liquidity. Never buy. It's too expensive to buy because every time we take out buy side, price will retrace. We took buy side here, it will retrace. We took buy side, it will retrace. Never sell when we take out sell sign. These things should always be never sell. Too cheap. Now, we took buy side liquidity up here. When we take buy side, we want to observe the reaction at this key level. We have a monthly level. We put in a swing low. So immediately at this point, because the candles we're printing are a little bit fast, what I did is I went to the 15 seconds chart. Even if you don't have a 15 second chart, I'm going to show you. So why did I go to the 15 seconds chart? Because I wanted to look for the 2022 model. Okay? The 2022 model suggests that you wait for buy side to be taken out aggressively. Aggressively. It is also the one setup for life. The one setup for life on a bullish scenario. We see high, we consolidate around the key level, okay? Take out the key level aggressively and then drop. Okay, that's the one setup for it. Now, on the 15 second chart, we consolidated around here. Okay. Now, this is a swing low. A low, and a lower low qualifies to be a swing low. Now, this is a market structure shift right here. High, low, lower high, and the market structure shift. So I saw that we had a market structure shift on the 15 seconds chart. Okay. Now, when we had put in the market structure shift, you always want to wait for some displacement, like a few pips below, close below, not just it could be a liquidity sweep and freak you out. So me, when I saw this market structure shift and I have my key level here, I sold here around here, I think. So let's go back the 1 minute time. I remove this that we can see where I sold from. I sold at this candle. Okay. Why did I sell at this candle? Because again, you have to understand the candle science. You have to understand how each candle tells you a story in the market. Okay. If we are on a daily chart, hmm, assuming these candles are daily candles, and we put in an indecision candle and the price is in a premium, where most likely do you think price will go? Will go down. So we put in this indecision candle, but on the 15 second chart, you can sell. So when you are ever at a key level like a previous monthly high, wait for a lot to be put in and wait for price to return to this level and target this low. The moment we go below this low, you will see big down close candles incoming. Here, put in that coordinate, big down close candles incoming. And immediately we closed below, they started dropping. Okay. Because so many people had bought, sorry, on this day, we don't give them a chance to even exit their trades. They have failed their stop loss. Many have traded above this inversion. Okay. See how we aggressively take them out. Now, this is another trade. I took take profit right here. Now I told you to always mark your previous monthly high, previous monthly low, 3 days high, 3 days low, previous 2 days high. You see, this is a 2 days high. We took level, we took liquidity, and we hit the 1 hour fair value gap right here. I think ICT would buy this level, but me, I would not. I would wait for confirmation. Now, when you have taken liquidity, where is liquidity? This is all liquidity below here. This is all liquidity. This is sell side liquidity. Whenever you take liquidity, I told you should never sell. Okay. Some YouTuber bought here and was ripped. Me, I sold. Sell side liquidity. Now, whenever you see this car buy side, okay, this is like a stop hand. One, two, this candle here. This one is a momentum candle. It crosses below this gap. Me, I waited. I sold when this candle was coming down. So the first point of buying is this one. So I bought. Now we are buying to target all these people who are now joining sales. So many people are now selling. Now, because retailers have been cooked, now they want to join sales, okay? We want to go and take them out. I told you when we take out this, This level, this strong immediate rebalance level, this level is strong that we are going to take out all the sell side. Now, we talk whenever you are in a buying position like this, here you buy more, and the price drops aggressively like this. If you are aiming for this high, put your take profit at this high because the price will come and sweep this high. This is the price communicating that I want to switch gears now. I want to change. I want to now attack the sellers. So here I didn't take profit. I was supposed to take profit, but I think I got lost here. I got lost. Literally, I got lost. So I bought more here. I bought it because I thought that we were going for these highs. So this is one thing I forgot, that with this aggressive downward move is an indication that, you know what, I'm now going down. Next time, but this is buy side. You see this down close candle, this huge drop. Take your profits here. And I told you these levels are magical levels. This level, when we break above this level, you know all the buy side is going. Okay, we will see that later. So now, because we broke below this level, I was supposed to carry this whole logic that, you know what, all the sell side is going. So we wait for people to be induced, and then we're supposed to be sellers. So I realized this later. What did I do? Now, next time I will not get a trap like this. I will wait for this inversion to be created. After this huge drop and a huge manipulation upwards, this is our selling point at this candle. So here, I exited most of my positions. I exited here, exited here, I exited here because now price was dropping to take out all these sales. At least I didn't realize when I was live trading. This was a demo trade, paper, not money. So now here is our logic again. Our opening range gap is our key level now. We put in a low. The moment we break this low, we expect down close candles. So me, I was watching price here, put in this low with this immediate rebalance. I was waiting for any candle that comes up to sell that candle. It came, I sold. I took profits at this level and at this level. Now, when you see this consolidation, I told you is what? We are cooking the one setup for life. Consolidation, now we cook again. Huge drop down. We have taken PM. Now, this is the PM trading session protocol. You want to be at the charts at 12 p.m. At 12 p.m., the first swing low that is taken out will act as sell side. When we take it out, we also take out buy side liquidity. And we are below the opening range gap. We are almost in the in the upper quadrant. We didn't reach 50% because price was too bullish. You see from here to here, this is like we are still in the upper quadrant. This shows that price action is very bullish. We can now go up. Now we can buy and hold. How? Aggressive move that you want to see this candle. And this candle breaks this low. You wait for inversion. It can be. So first buy position is this one. So me here, when we took out, let me see, here I took profits here. So after selling here, took profits here, and then watch this aggressive move downwards. I waited. I was supposed to buy on this candle, but I think I bought on this candle here, on here. So, so I bought on this candle here. I was supposed to wait for inversion close above and buy here first position. Second position is close above this inversion. But when price gives you a chance and retests this inversion, okay, this inversion right here, you wait again for the same signature, you buy more. So here, me, I was buying more. I buy more. I bought more. So I first buy it here, drop, I buy more, drop once more, I buy more. Out of the price, I buy. Take profit, one was here, it was here, and then I held until this point. Okay? So this is the one setup for life. One setup for life. These are paper trades. Inversion, sell side, buy. Project above here, you start buying. Now, what did I tell you? This balanced price range is so strong that when we break above this one, you see the momentum went. Now, if you know what I've been teaching you, you know what happens. We have taken buy side. Hmm? We are at a previous monthly high. What did I tell you we do? When we take buy side like this, we wait for a market structure shift with displacement. Okay? Market structure shift is right here. And we can use OTE from this high to this low and buy. When we are below a key level like this, we wait for price to put in a low. And when it returns to this level, we want to be sellers. So here, I think I was distracted. I sold this candle and I put my stop loss, I think, right here, right here. I was taken out by just a pip. Why was I selling? Because we have these are final trading hours between the 2 and the 3 p.m. to 4 p.m. The market wants to close. So we are selling to put in the week. We are anticipating the whole daily range. Like you see, we open low, high, week, and close. So we are selling the week. So here we sold. So this one was taken off. This was the last loss of $16. Uh, these are the trades here. Yeah. So this is the last trade. And the other two losses, I think the other two losses were these ones. These two losses here, where I didn't take profit. I was supposed to this I bought here. Then these two I put in extra lots here. Then I took out here. That's how I was able to make that loss. I want us to go detailed. Okay. How would you approach such a day coming in? Let's go to a clear chart. Go to one day. How? What is the thought process you apply going into such a day? Okay. I always told you that on your charts before even you do anything, some levels which are non-negotiable. Our draw on liquidity on a monthly time frame is this previous year's high. I told you that these levels are non-negotiable. One is the previous monthly high. Previous monthly high is non-negotiable. Previous yearly high is non-negotiable. 3 months highs are non-negotiable. One, two, three. And the 3 weeks highs. So previous monthly, yes, 3 months high, which is also like an order flow. These are non-negotiable levels before even you start trading. You can every day you have a few because you're in direct range. Since you know your long-term dual liquidity is up here. This is our long-term dual liquidity. Let's go to 1 week. From 1 month, you do the same thing. The non-negotiable levels on 1 week also. Last 3 weeks highs and lows. Okay. But since we are bullish, we are attacking the last 3 weeks highs. So this previous monthly high is in line with the previous weekly high, last week's high, this one here. This is last week's high. So I think we are good to go for now. And this one here is our like long-term draw on liquidity. This is short-term draw on liquidity with this week. So the week levels are so important also when you're targeting them. The first target is the base, the lower quadrant of the week. These are our liquidity points. I didn't use them yesterday. So lower week and the consequent encroachment. You see how this market decline reaches lower week and the high. So we got the daily. The non-negotiable levels, the daily. Non-negotiable levels, the last 3 days highs and lows. Okay. These are all taught by ICT. So last 3 days highs. You count. This is our trading day. One, two, three. Okay. This one here is in. This one is non-negotiable. Previous days high and previous days low. Non-negotiable levels. Previous days high. So we fell short of previous days high, but that was my long-term dual liquidity. Last 3 days highs and lows. See this? One, two. This is what? The last 2 days low. I call them last 3 days. Last 3 days. These are so important levels. And this one is far. So when this one here is the last 3 days high. Last 3 days high. You are arriving, you don't know the bias, you don't know how bias is bullish, you know the bias, sorry. But we want to frame our trades. One, two, three. These are important levels. Also last 3 days high. Now, when you have that in mind on a daily, on the 1 hour, you want to see if we are bullish, what do we expect London to do? If we are bearish, London will put in a low and then go up. But what happened is that the previous day it dropped in preparation for CPI. Why are we dropping? This market is bullish. We are not dropping. I saw a YouTuber, one of the common mentors, they said they are going to sell NQ. I think it is good to trade when you have narrative. Because I want my things to be perfect. So let me just organize my charts here. I don't like things which are scattered all over. I want perfect things. So one of the YouTubers said, shorting NQ when NQ was around here, because what are they? The pattern trading. What is the pattern? Sweep liquidity, break structure, like market structure shift here, aggressive break structure with a fair value gap. They wanted it to go short, so they said going short like this. NQ. Then later he posted minus 1 hour. So you have to know the narrative behind it. It wasn't a sell. This sell is to trap retail traders like him in order to look for shorts. Okay? They will look for shorts. They will look for whatever way they can get shorts. But we know our dual liquidity is high, so we are bullish. So you see what I told you? Last 3 days low. Last 3 days high. 3 weeks high. Previous days low. These are so important levels. Now going on to London session. Go to 1 hour. On the 1 hour time frame, I told you we want to always mark out the 1 hour fair value gaps. Okay. So 1 hour. No, they will look a bit congested, but when you, because we are 1 minute time scalpers, we will not be affected. 1 hour FVG. FVG. So this is FVG high. And if we are overly bullish, we won't even reach consequent encroachment. We will just rotate around the FVG, because from here to here, okay? Failure to reach even the midpoint tells that price action. Don't be surprised next week when we open with a gap higher. Then we continue to reach our dual liquidity. So this was after NFP. Okay? This is the fair value gap was quoted because of NFP. So let's go to London session trading. We go to, from 1 hour, we got 15 minutes. Now this is when you have to watch the ICT 2022. Okay? ICT tells us that when we take sell side, see this is the previous day's low, we took sell side, According to 2020 model, we take sell side, we break above a swing high, which is here, market structure shift, then we are going to go up. This was actually here. But this wasn't clear for the people who were trading London session. Oh, sorry, London didn't give us any trade after that night, so there will be no trade. Now, before we even think about London trading, and before we even start trading, we want to mark our opening price at midnight. Okay, midnight opening price. Right here. So we want to mark this price action here be our midnight opening price. This price should always be on your chart, whether you're trading forex, whether you're trading crypto. You want to know where is the midnight opening price. Okay? Let me just make the font a little bit bigger and visible. That at any one point on a 1 minute chart, you know. Now you also want to mark the 8:30 opening price. This is 8:30 opening price. 8:30. Now we are framing our trades, okay? Before we even take any trade. So this is 8:30. 8:30 opening price. Not forgetting whatever you have learned, you are putting everything together. So if we are bullish, we want to buy below the midnight opening price, we want to buy below 8:30. Now, by the time London fails to even come below the midnight opening price, that has to trigger in your mind that price action is overly bullish. New York comes, it fails. So why are you looking for shorts? That means we're supposed to be longing, but we don't just long. We long when the market is in discount. The other thing you have to do is you want to mark out 9:30 opening price. Okay? So the 9:30 opening price, this opening price is your opening range gap. This one ICT teaches it in 2024 mentorship. So open, if you don't know bias for opening range gap high. Once we have our opening range gap high, we want to look at the 4 p.m., the previous day's closing price at 4 p.m. Where is the previous day's closing price at 4 p.m.? At 4 p.m., this is 4:30, this is 4:15, this is 4 p.m. So this is our opening gap, range gap low. Okay? You're doing all this because you don't want to be caught offside. Opening range gap. So this is going to help you in framing your trades. If you don't know that, you can use the regular trading hours and you look for these price actions. You see, right? The previous day's closing price and today's opening price is the opening range gap. And if we are bullish, we want to long. We want to. So next week we can come up with the midpoint of this opening range gap before we continue the sell the longs. So we want to see price action return to at least 50% before we can long. Otherwise, when it opens above, price is too expensive, like it's in premium. We cannot buy something which is expensive. We wait for it to come to discount, then we buy. Next week, we'll have some discounted price, then we go long again, depending on the economic current and the bias for the week. So you go back to regular trading as you don't have to do this. Okay? You just note the 4 p.m. closing price and the 9:30 opening price. If we are bullish, on this day. I'm assuming all this is there on our calendar. Uh, if I go here, okay, okay, okay. That is how I'm assuming price action is here. It is too expensive to buy. Okay. Do we have everything intact? Hmm. We can now remove that. Now we go to 1 minute. Once we've done all that, 1 minute. Now this is where magic happens. We want to be aware of the previous session's highs and lows. Okay. On this 1 minute. Let me change this color to black, like this red color. Yeah. Now, as it tells us, when you have these strong colors and we have all these, you have to have a naked chart. But for me, I use these dull colors. You have this, it's like you want price to be at that line, like let your will be done. I've done you here. So now, what we're going to do, we are going to start trading at this point. Okay. I don't know if I should do replay or not. I think I'm going to do replay trading, so we can see sequence of how you think. Okay. Let me leave this there. I'm going to do replay trading from this point here because we know what happened. Okay. We have showed you we are here. This is the previous weekly high, also previous monthly high. Below here, we have the 1 hour clear value gap. So this is also like sell side. We also have more sell side below here. You have to be aware of these levels. Sell side. We've gone into that trade. We know that we are bullish. Opening 8 opening price is here. The opening range gap high is here. So in price action now we are here at this point. It's too expensive to buy. At this point we have our sell side. Have our buy side liquidity. We also have our sell side liquidity. Sell side liquidity. Now, this is the 8:30 opening price. We have a key level up. We have sell side below. We can either go up or we can go down. We are looking for buys. We can't buy when we are above opening when gap is too expensive. So ICT teaches that in the first 30 minutes, price will graduate toward the midpoint of that opening range gap. So, but this is not a constant that you always do that. That's why you have to understand how each candle opens. When 9:30 opens, it fails to sweep that high. Happened. Now it sweeps this high. Once we sweep the high, okay. Now I start to think we may be going for all this sell side here before we go long. Okay? This is what is in my mind. Okay. And most retailers want what? To sell short. And what guides you is, do we put in any displacement below? We want to sell. Of course, we took buy side. We have a market structure shift. Don't have displacement and follow through. What happens next? We don't have it. This is a strong price point. Okay? From at the charts, I don't want price to break above this high. If price breaks above this point, I kill my shorts. I was looking at this price action here. I think I was trying to short. Then this is now we are going to target the opening range gap, but we don't have even a fair value gap. It's good to wait for the first presented fair value gap. Let's see. Okay, I think I can make this to play like no more. How do I say play? So you see that? It's too fast. Sorry. Maybe play back again. Maybe we use the 0.01 and let's go back this point and see. So that I just have to be talking the points. Let me see how that plays out. 0.0. How is that? About 0.03. Okay. How's that? Is that okay? I think this is okay. Yeah, to give us time to react. Yeah. So what I want you to understand is how these candles printed because we have the ideas. Now I want you to watch closely as you listen. Okay. When we put in this candle, we were waiting for a fair value gap to follow through so that we can go up. But we break above this high, we expect price action to. It's too fast. 0.02. So I don't expect price action to break this immediate rebalance price action. Okay. Now we are watching. We even failed. We've taken sell side, we've taken buy side. Now we are watching. We break this level, we fail. Okay. Now, if watch this happens, this is immediate rebalance. Now, in my mind, I am like, okay, this displacement is enough. I'm buying this market. My stop loss is going to be below this week because I don't expect what's happening. Is buy. So I'm buying. Stop loss is below this week here. And if I take profit, I am targeting the previous monthly high. It is the nearest key level. Okay? And remember, it is too expensive to buy. Take profit. Yeah. Stop loss. Yeah. So this is our first long. Why are we long in this market? Because of candle science. We know we have understood how these candles print. They are speaking a language that we are understanding. Okay? We want to buy, and at least TP should be 2R minimum. Let's see, 2R. 2R is right here. Just, I don't know why this is a high. Take profit should be at minimum 2R. Our stop loss should be below this week low. Why? Because I'm anticipating that this is a balanced price range. You see this huge displacement and the huge reaction. And this is also close above this down close candle. This is an order block. The best buy would be when price returns to touch this order block. Best buy position could be when price returns it to this order block. But this is 9-1. Price can be so volatile. This could be our first buy position. Now let's see what happened. Price returned and even failed to go short of this. So remember, we have last 3 days high right here. We even closed above. So these levels are important. I told you. We have closed above the opening range gap. We've closed above the last 3 days high. Now we watch what happened. Now we put in our first value gap. Yes. So this is our first presented fair value gap, isn't it? On this high. This is our first presented fair value gap. But from 9:30 up to now, we didn't have any first presented fair value gap. We can even put in an indicator for the first presented fair value gap. Is it? It's not on this chart. So we can be buyers again. Okay? We can buy one more at that point. My stop loss can be below. Now, since we have moved, I move my, see how we are scaling in. This is a balanced price range. Don't expect price action to come back behind. Stop loss can be below here. Now let's see what happened. We tapped the first presented fair value gap, which is our second buying option. This is a dangerous place to buy because price action is in a premium. But because we are in a premium, we don't have a key level. If we break below this low, this balanced price range, then we can expect shorts. But for now, we want to buy, we want to sell above. Smart money is going to go and sell above. Now, this is the balanced price range. Don't expect price action to come below this level. The same thing I told you here, this level here. Immediate rebalance. Let me even change the color. You have to read these candles. You have to read the story. Okay. This one, you could be a buyer here because you have a target up here. Okay. You could be a buyer. Price action goes. This action goes now. Is finding a weakness up here. We hit the previous weekly high. Now here, you want to be break even and you have taken up most of your positions. Because price is too expensive. We cannot just keep going up. Let's see what happened. We immediately reject the previous weekly high. We put in a swing low, a higher high, lower low. Let us watch. I told you that from the recording, if price action puts in such a low and you have not taken profit, move your profit above there. And we don't expect price to break below this immediate rebalance. This is the same price action. Let me just show it to you. You're reading a story that the price is telling you. Now, price is now finding a hard time, keep going up. What happened? Price is finding hard time going up. Now, we are at a key level. We put in a swing low. Should we break this low? That will be a market structure shift. I don't expect this low to be broken if we are still going up. Okay, we are reading the story, and let's see. We are still resisting to go beyond this part. Now, see what happens. We put in a huge displacement that we are waiting for a break below this low. So many people will come in and they want to start selling. You wait. What happens? Total respect of the law. Total respect. Total respect. That's when we break this law. When we break this law, you want to sell immediately. Okay? Because you have a previous weekly high as a key level, you have a market structure, but you can wait for a fair value gap to be created. When you advance in these things, and you know that we are targeting the opening range gap and the liquidity has been generated right here now. You have sell side right here. So many people have been longing. Now the questions you'll be asking, it is NFP day. People are saying this price action is just one-sided. Now for you, You sell. Why is your stop loss? This is an order block. Stop loss is only safe above the previous weekly high before you get a fair value gap. Okay? It can take you out. When it takes you out, you go in again. But we want to see market structure shift with displacement, at least a candle to close below like this. Now, I told you when we close below this level, we have nullified it. Okay? When we nullify this level, it's no longer important. The market has shifted. We can be sellers now and price retests this order block. We don't want to be sellers here. It's too cheap from this high to this low. Let it come back to the equilibrium of the range. Now, what happened? We have the first presented fair value gap right here. Okay, let's see. We hit our first presented fair value gap, almost reached take profit. But as long as this low stays here, we have a fair value gap which has been put in. So ICT tells us that you can be a seller at this fair value gap, but watch for any other possible. But you say you can be a seller here and your stop loss below this energetic move that caused this. But you see how your risk reward has been reduced. Eh? Let us sell still. Sell one more from that point. Why we sold here? Because this is a replay, it can't give us the balance. So now what happens is that we go, price action is returning. That is when you sell here. When price action is returning, be a seller there. So when you're in a sell, because you have the narrative, you are going to see these price moves. Okay? You want to stay alert because you know that the narrative is bearish. So it is tricking people to be buyers. For you, what you do, you wait for a close below here. You want to add more positions. But if not, when it returns to that key level, you sell more. That respect of the order block. You can be seller. Told you the first bearish candle, you want to be a seller here on this first bearish candle. Your stop loss is safe above this level here. First energetic move. So price action comes, it comes, it generates liquidity, it fails to go through. So some YouTuber exited their position. I think for me, I sold here. You see, I sold here yesterday. These are not the ones I was selling live as so I was playing, and I sold some more. Okay. So I told you when you break below this level, for you want to be a seller. You see how price action is respecting this order block right here. Price action is respecting this order block. Total respect of this order block. And fast forward, price action came. So what is price action doing? This is the first presented value. So price here you start anticipating this consolidation. Price action is cooking. The one set up for life. The one set up for life. Price action is cooking the one set up for life. These ones here. I literally called these moves in the Telegram channel. I think I was like, you know what? We're going to come, take this low, take this high, then come lower, and then fly up. How I gave them in the Telegram channel. I was calling these moves live. So price is cooking the one setup for like how does it look like? It comes, price action consolidates around the key level, consolidates. Once aggressive move down, once a stop hand, once an inversion, and we buy. That's the one setup for like if you see this signature print, I will go full margin on my demo trade. So price is cooking the one setup for like. Do you see any aggressive move down? No. Aggressive move up. If we had aggressive move up, then we would be going for sales. Aggressive move down, up sellers. So many people want to now join the sales because they are frustrated. They're like, actually, it's boring. Remember, this is a macro from what? 950 up to 10. Now, aggressive move down. Did I tell you that? Aggressive move down. What do you wait for? A stop hand. See, aggressive move down. You don't take out sell side. And that one set up for like you have to take out sell side, okay? You just note your inversion. You're doing this in advance. You're preparing hmm, for the one set up for like what happened. Price comes, it comes, takes out the low aggressively, and now this is a stop hand. Okay, I see it. I think we'll buy here. So this will be our market structure shift because it is lower high, high high, lower high, break above the market structure shift. You see that break with the momentum. Of course, we wait. As it immediately rebalance this high, which was broken. See, immediate rebalance and reject. You want it to now fly. You just buy. Hmm? Wait, don't move. We've not bought. So immediately this candle closes. Okay. With this momentum, and it is 10:30 around here, the trades move, and we have cooked. Okay? Now this is no longer important. We remove all these because every time something plays out, don't want it to stay on the charts to distract. This is not important anymore. We've had our two trades. Now this is the range bound day. It will take sellers, it will take buyers. You're comfortable. You just buy. New demo trade, you buy. Stop loss is safe below this inversion. Because we even have an order block here. We have the opening range gap. We've closed above the 3 days high. What is our take profit? We want to take, we can take our take profit that previous monthly high here, but it would be good if we took out this buy side, and I want this to be taken out after close of London session, close of AM session. So this is like buy side liquidity. We repeat same process. Now, let's see what happened. Does price create a fair value gap there? Now, when this happens, the chances of price returning to this fair value gap are started to reduce. There, if you didn't enter, you wait. It gives you a chance. Like I think it gave us a chance. What has happened? Let me pick my charger just once. So price gave us a chance to go in. At points, uh, we're waiting for price. Any bearish candle we are buying. Any bearish candle that comes now. So now this thing has stopped playing. Start playing now. So here, bearish candle, we buy more like here. We'll be buying more there. We buy without, I think I bought there, exactly that point. Then we go. So the one set up for life has been cooked. Okay? Just hold and wait because you know the narrative. Okay? Price action will generate around this point. Uh, any retracement lower to this place, you buy more. Okay? You are buying more. Price action came to swept this liquidity, closed above, you buy more. See this? It never moves in a straight line, so that one you should know. This is not a reversal signature. Why would it reverse here? Just buy more if you have for. And move your stop loss to now here. It's just deceiving you. There is no reversal signature there. It has to first hit a key level, it has to take sell side before it can reverse. We want to see aggressive take of sell side like that. You see that? Now, when we take sell side aggressively, we want to see what happens. We don't want a weak through, we want a break with a body candle closure. Take sell side. Now we are failing to put in do we put in a swing point? Now when we put in a swing point, now we have noticed there is a failure swing. Now this is where I went on the 15 seconds chart. But for you, you wait for price to put in a low below the previous monthly high. You play price. You want to see a low. We've not put in a low yet. There is no low yet. We put in a low. Yes. Now, the moment we break this low, you can put your limit order below here. If not, you go to the line, wait for it to break, then you can be a seller. Or you wait for price, put in any bearish candle. Okay? See this? This is a rejection candle. Wait for any bearish candle. Any bearish candle. We sell. Because we have hit a key level, we've taken buy side, we are anticipating a market structure shift, which we already have here. Market structure shift on the 15 seconds chart. Our stop loss is safe. Because we've waited for a bearish candle, our stop loss is safe up there. Take profit. Remember, we didn't take all this liquidity down here. All this liquidity. So we want to take all this liquidity up to the 1 hour value gap. We have to be thinking. And we have to be thinking. There was the 1 hour fair value gap which we showed. Go back in the video and you see it. Now, once we break this low, you just start to anticipate what? Big down close candles coming. So big down close candles start coming in after I put in a low market structure shift. And you see, price action may not come all the way like see that big down close candles are coming. When price action reaches here, we've taken AM. You see that New York AM sell side has been taken. We have reached a key level. Do we see any inversion? Let's see. We put in. I will go long. If I see this, it's good to wait for at a fair value gap. But you see, we have an inversion. We have taken sell side. Me, I will go long. Okay, with a low risk entry. Stop loss will be below this candle that created the inversion. My take profit will be this breaker here. Because high low, this is a breaker. As I'm watching, putting a low risk entry. I want to see if we form a fair value gap, correct? We now have a fair value gap here. We retest this fair value gap. Is our inversion after sell side. Inversion after sell side. And this is just a fair value gap. Fair value gap after sell side. We want to see if price can come and retest it. So we just tap the opening range gap high, J rate among here. Then so I would be in this trade. I would not add. Now, yeah, is when I would add. The moment we tap and fly like that, I would buy. Even move my stop loss to a little bit higher. This trade was done. I think I sold on this candle for me here. Now, we watch price action, but it's a game of risk. Keep putting and wait. Because now we've taken a lot of sell side. It makes sense for us to buy. As we are watching, we are targeting this high, but we keep watching and monitoring. Remember what I told you in the previous explanation. If we are going up like this, and then we see a sudden drop in price action, this is our final target, let's say, then we are going to see what will happen. Sudden drop like this, the stop loss should be here. Then you're sure that you don't want to see these sudden drops when you are bullish. Yes. Just put your take profit there. You immediately after the move when your stop loss. This is your risk. Now we have reached lunchtime. So lunchtime came. Look at the pre-lunch sell side here. Now we are watching. We're supposed to go higher from this inversion, but we are watching what happens. This is good when we are validating that fair value gap. We validate it more. This one here, you see this signature after this huge drop. There, next time I will go short. But here I didn't sell. The profit is the same. Have this swing high. And your take profit is we are coming to take all this sell side. Okay? And your stop loss is set above that swing high. So if you're still doubting, you wait for the closure below to give you a breaker. We have our 3 days high. Let's wait for a closure below the 3 days high or the opening range gap. We can sell more if you are still in doubt. Time always moves a little bit slowly. When you have the narrative, now we can sell more. Okay, because we've closed below, stop loss is safe above this fair value gap. Okay, don't expect price to go up there. And we have immediate rebalance here, and we don't expect price to go above this high. You can always be seller. When I return into that 3 days high, you can sell more because we know we are aiming for the opening range gap or the opening price at 930. So price puts in a low, okay? We wait for it to put in a low at below the opening range gap, then retest the opening range gap. You can be sellers again. Because we have a lot of target that was put in below the key level. We always want to see that scenario. Okay. When we break below this low, we're going to see down close candles. When we break below this lows, huge momentum down close candles will start coming. Because we put in a low, we tested the opening range gap high. The moment we break this low, that is immediate rebalance. We expect big down close candles to come in that will be broken below that low. Price will manipulate you, do what? But we will see a big down close candles which start to come in now like that. Now what are we doing? We are cooking again. Are we cooking? This is lunchtime. We are cooking one setup for life. We are cooking the one setup for life. So this was our original sell. But this is the range bound day. I don't know how I was able to sell all these moves. I literally have never done this, but so surprised when you don't have emotions, how you be accurate in these moves. Literally sold yesterday. I traded like a machine. So we are cooking the one setup for life here. When we cook a one setup for life, we want to see aggressive move below liquidity, which is this low here. Okay? Do we see any aggressive move below? Nothing. We are just cooking, still cooking, still cooking. As we watch, of course, we are watching this car fair value gap, but it's pointless because though we are at 3 days high, we didn't take any liquidity below. Just watching, and even we fed close above. When we take this liquidity aggressively, these are the candles you want to see should be taking liquidity. Here, you will buy immediately. Now, if I am to, this is our inversion after sell side. You always prepare to anticipate these moves so that you're not caught offside. That's why you have to concentrate. No distraction. You cannot do any other thing. Here, you want to buy here. Stop loss should be below. This is sell side. The sell side is always a killer. This is our stop loss. Now, because now we are near the opening price and we are expecting a bullish day, we want to buy and take out all the sellers because we've confused everyone in the market that this is buy side. Buy side. Now here, we buy and hold. I told you the PM session trading strategy is that you be at the charts by 12 p.m. And when 12 p.m., the first low that is taken, put in at 12 p.m. here, price puts in a low, expect it to be swept aggressively. This is your one setup for life. At 12 p.m. here, put in a low, retrace. This is not a buy signature. No, we want it to be aggressively swept. And now we can buy and hold. This is our buy side that we are targeting now. Now, we literally buy and hold there. Buy there. Or we watch price. We want to see displacement. Break above here, we buy more. This is second buy position. Third buy position. Break above here is the fourth buying position if you still want to buy. See how these levels the market maker buy model. So what is on the left side has a support for the right side, even break above here. So let's see if we are right. We start read order from that it does break above that high, support has to go higher. And a return below the inversion, we want to be buying. And a return below, I think I was buying here, bought more here. It gave me another reaction here, I bought more here. Then it gave me another reaction as it was exiting here, I bought more. At this exit, this next candle here, I bought more. See how price action is respecting the bodies remain above this inversion. Now you're reading a story, all the bodies are staying above. I think that's when I bought more there. Stop loss is now safe just above here. Where's your take profit? Take profit easy. We're anticipating a bullish day. This is the trade for the day. You buy and close the charts. Now we want to see any break above. With the momentum or not? You buy. Don't expect price action to come below here. Hmm? With this huge displacement, you're sure price will not come back below here. You buy more. See how you're reading the story. Hmm? Reading the story. Yeah, at the opening range gap high, the next buy point. Well, this could have been a buying point, but we bought enough. One here, break above here. Well, if it comes back, we will. But since the bullish day, let's see. So we are waiting for 130 opening price. This is 124, 125, 126. So we retrace to this low. So break above here, we could still be buyers because we would have gotten support from what? This level. Let's see. We have retraced and it is what? 128. Put in a low. So I was expecting this low to be swept at 130 because we want to buy below the 130 opening price. We didn't sweep that low. So it could be a buyer close above because price action is literally overly bullish. It could be a buyer here. Stop loss could be just above. Okay, that's going to move, but stop loss is above. So it could be a buyer here. It could be a buyer here. The first take profit, of course, would be the PM highs, lunchtime highs. It could be a buyer. It could be a buyer here. Okay. It could be a buyer here. It could be, so you see how the candles are telling you the story that we are going up. We literally respecting all the PDRAs. Whenever we close above, down, close candles, we respect them. And we could also be buyer right here. Okay. You don't have to take all these trades. You just have to look for the high probability trades. The highest probability trade is one here, and this one here. This one is high risk. So let's see what happened. The 130 opened. Left forward, price forward. This balance price trend, you also want to be a buyer above there. It's not playing. It's going to be a long video, but it's worth it. This is PM session. So as I was watching PM, I wanted this to first sweep this low, but it failed, so I could add more positions. So I didn't add any positions because it's literally failed to sweep this low. So here, being a range bound day and we have overexpanded, I anticipated price to come and take out this liquidity, put in a week, how the candle closes, opens, low, high. So here I sold it a week, but then I got stopped out. That's how. What's wrong with this reflection? I literally called these moves when they happened, which was really interesting. On such a day like NFP, I didn't expect it. Literally would draw lines and price would respect. I think there's a malfunction. Just a second, give it a second. Oh, I don't know why this is happening, but I'll take profit. Okay, let's put it back to normal. So here we didn't give any chance. So when we are in the right side of the curve, price action will literally respect and will not give you a chance. So to add your positions, you look on the left, add, add, left every time we break above a key level. Don't expect those huge swings and deep retracements when price is almost hitting your door liquidity. It will give shallow retracements or no retracements at all. ICT talks about this. Wait and see the reaction when we break above here. That's why you want to add more positions. Because price will not give you a chance. Uh, so here you would add more because price action has showed you intentions that's going up after we cross above there. Sometimes you wait for a closure above, it won't come. When it comes, it will just rip through and go without you. Then you still look and hang around trying to wait for price to retrace. It will not come back because it is so much in a hurry to take out people who have sold than giving them a chance to exit their positions. That's why price action will be one-sided. This ICT talks about this in 2022 mentorship. You have to watch his YouTube videos. But what's up with the thing? It is literally playing like a chameleon. Oh, let's go to 2 minutes or so. Making a video longer, so you have to invest time and watch. Well, if you watch till the end, you see how we put in the one setup, right? We want to see aggressive sweep of liquidity, break above, then we can sell. Yeah, next time you see this, don't expect us to return back down. The one setup for life. Sometimes when price is in a hurry, it will be one-sided, but it's not in a hurry. Well, yeah, so we are in a replay trading, okay? There's a difference between paper trading and replay trading. Yesterday, I was doing paper trading. Replay trading, literally, you know what happens, but in paper trading, you don't know what happened. Let's go back to 1 minute. What's happening with the internet? It is okay. Just move the Wi-Fi closer. See how it works out now. If you're watching, you can fast forward this part as we wait for technology. Technology. Oh, here you would be a buyer again. At that point, you would buy more in this closure above left side of the curve acting as support for that side of the curve. What is happening? And my player button keeps bouncing from that standpoint. I think that's it. We'll have to end the video here because I didn't want us to see the sell. We'll just exit part trading. Oh, okay, let me just press what? Go to 10 minutes and play one more, like two more candles. We can go home. One, two. Candles. Let them just play. One minute. I'll go back to 1 minute now. Oh, we're just kind of with one contract and we were trading a range market. A characteristic of a typical ranging market that's like NFP. On the 1 minute, this is the trade we missed here, which is the same characteristic, but I wanted to show it to you. We aggressively want to see this signature right here, like in the PM session. Most of the time, at 2:30, you want to see price hit a key level like a monthly high. You want it to put in a low, which we will come and sweep later. So when price comes and sweeps all that liquidity, the moment we break this low, you wait for a return into OTE of the range, or you could be a seller. So you can read the story. Notice I was using not a futures broker, but you see break above here is when you could be a seller, but you can wait for break below this low. And this could be a selling point around the order block here. You can always see this one here. Point of this order block or back here, and you can target the opening range gap low so that you can close here. But you don't want to trade all these, okay? That is too much trading, but it's good for learning. We're going to end paper trading. Yeah. No replay trading for paper trades. So on paper trading, I didn't do any trading on this broker. This is the futures broker. I was on NAS 100. So you see how the killer was literally passed on. There's a lot of stock hunt on these brokers compared to the futures trader. You see how in the futures market we didn't have these levels, quite a little bit different levels, but you have to take note of that. Stick to one. If you're using paper store, stick to it. If you're using other, see here, didn't have this sweep. Where we swept this high, the other side we didn't have. On the other side, this level here is like up here. Yeah, so that's it, guys. Hope you learned something from this one. These are literally moves I traded, ever traded live. Yeah, this is the history. These are the moves. with a 10K account and made $500. Which is it? Not bad for learning. That's it, guys. Let me know of anything in the comment section.